All right, let's crack open the strategic playbook used by the world's biggest brands to literally transform themselves from tiny garage startups into massive global empires. Welcome to The Explainer. Today, we're breaking down the exact strategies, the calculated moves, and, those hidden mechanics that really separate stagnant businesses from the rapidly growing juggernauts.
Have you ever actually wondered how a tiny, single office setup scales up to become a billion-dollar industry leader? Because the fundamental difference between businesses that just plateau and the household names we all know, well, it isn't just luck. It's not even necessarily better funding. It's their calculated, almost scientific ability to expand. Section 1. The dream of expansion, moving beyond the garage.
So, at its core, business expansion is simply the intentional process of increasing a company's footprint. We're talking about increasing size, customer base, revenue, products, or just overall market presence. But look, simply dreaming of this kind of growth, that's not going to cut it. It requires absolutely intense, calculated planning before you make your very next move. And there is a super stark contrast here. On one hand, careful planning leads to sustainable, long-term success and growth, but on the flip side, expanding way too quickly, scaling blindly just for the sake of getting bigger, that is a fast track to severe financial losses, massive operational nightmares, and total business failure. The most successful companies out there don't just leap. They analyze every single step to avoid those fatal pitfalls. Section 2. The Expansion Playbook, Physical and Structural Strategies. Entering new markets almost always follows a pretty specific progression. First, a local business builds a fiercely loyal customer base right in their hometown. Then, they use that momentum to open a second branch in a nearby city. If the numbers check out, they go national and eventually international. But keep in mind, doing this successfully requires some deep intelligence gathering. You've got to understand the local culture, the competition, and the regulations before you ever break ground in a new spot. Now, instead of relying on just a single offering, a lot of businesses pivot to product expansion. Just think about your typical modern smartphone ecosystem. A company absolutely masters the smartphone, right? Then they start introducing tablets, smartwatches, wireless earbuds, and laptops. And why is this such a game changer? Well, existing customers already trust the brand. Building this kind of ecosystem skyrockets cross-selling, and it massively reduces the risk of relying on just one single revenue stream. Section 3. Fast-tracking growth, franchising, and acquisitions. But what if a corporation wants to grow even faster and they don't want to build every single location from scratch? Well, they use two heavy-hitting corporate moves. First up is franchising. This really lowers your financial risk because you're utilizing other entrepreneurs' capital, while the parent company just provides the support. On the other hand, we have acquisitions. Now, this requires a massive investment upfront, but it buys you immediate access to existing customers, proven technology, and instant market share. It's exactly why global megacorporations often quietly own dozens of the brands you use every day. Alternatively, you've got partnerships and strategic alliances. This is a brilliant play, where companies combine complementary strengths. Imagine pairing one firm's cutting-edge tech with another company's massive, established customer network. Both sides benefit immensely. They drive innovation and cut costs, all without the massive legal and financial headaches of a full-blown corporate merger. It's a win-win. Section 4. The Digital Frontier, Scaling Without Borders. When we compare traditional expansion back then to today's digital landscape, the rules have completely changed. For reach, you used to need physical brick-and-mortar stores in every single target city. Now, e-commerce and mobile apps make worldwide sales practically instant. Marketing has shifted from incredibly expensive traditional advertising to super cost-effective digital marketing on social media. And ultimately, scale is literally no longer limited by physical space or geography. A startup operating out of a tiny office can now directly compete with major established corporations. But here's the thing. Scaling isn't just about reaching outward. It's also about accelerating inward. Adopting internal tech accelerators like cloud computing, artificial intelligence, automation, and data analytics completely transforms a company's back-end operations. These tools allow businesses to slash their operating costs while radically improving efficiency. By leaning into these technologies, companies can scale their customer base exponentially without completely blowing up their overhead. Section 5, Risks and the Golden Rule, the price of scaling. Okay, let's slow down for a second, because limitless growth and billion-dollar valuation sounds super exciting, right? But if you expand based on hype rather than calculated research, you are going to hit some massive roadblocks. Rapid scaling can severely strain your finances and completely overwhelm your employees, which, you guessed it, directly tanks your product quality. Throw in supply chain disruptions and jumping into international markets without doing your homework, you'll be slamming right into brutal language, cultural, and legal barriers. It can be a real mess. And that brings us to the ultimate anchor of this entire explainer. Here is the golden rule. Behind every successful expansion lies one important principle: understanding customers. It's absolutely crucial. If you fail to listen to feedback, or if you don't adapt to shifting market needs, all of those brilliant expansion strategies we just talked about, they will completely collapse. True, sustainable growth always ties back to customer trust. When you really think about it, every single global giant we see today started out as a small operation. They just had a big vision and some really careful planning. Their success wasn't overnight. It was built on courage, relentless research, and running the exact right expansion strategies. So here is a thought to leave you with. The next billion-dollar empire actually exists right now, operating as a small, local business somewhere. With the right playbook, could it be yours?